All right. Another great day comes to an end. It's about that time of day again here, folks. Time to get back to work. Time to get ready for tomorrow. It is that time of day after all. Tuesday evening, January 28th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me. I help traders find the best of the best entry setups using a very simple three-step strategy that we teach and trade together every morning in our trade room. But my job is a little bit different tonight. Tonight, my job is to help you find the best levels of support and resistance, the best entry setups and targets for tomorrow, and most importantly, the biggest traps to avoid in tomorrow, the FOMC Wednesdays trading session. And we have a lot to talk about on this video tonight. Of course, we'll grab the charts tonight. All the charts are all prepped up in the background. We got some oil, some gold, some Nasdaq, and some S&P. We got some gaps getting filled. We got some ranges, some spiking channels, stacking levels on top of each other. Got a lot to show you here tonight on the charts here tonight. But we also have a big day tomorrow. We get a lot crammed into tomorrow's trading session. And remember, we're going into the end of the month. So we'll take a look at the calendar. So make sure you know exactly when and when not to be trading tomorrow and what to expect. So we'll grab that calendar here in just a few moments as well. Before we jump into the video tonight, though, as always, I do want to remind you, if you're here for the first time right now, make sure you subscribe to this YouTube channel. I don't want you to miss another great video. I want you to know where all the best entry setups and targets are going to be each day. So make sure you subscribe to the video, hit that bell icon so you always get notified every time I publish something new. And don't forget, if you have any questions about the strategy, about membership, about our video classes, type those questions down in the comment section below. I'm always hanging out down in the comment section to make sure I cover all the questions. And while you're down there, if you tune in every evening to watch the video newsletter, give me a thumbs up tonight if you would. Always appreciate you guys tuning in every evening. And thanks for supporting the channel by subscribing. Hit that thumbs up button. And again, type those questions in if you have anything on your mind. Now, let's get this video going. Let's start tonight, first of all, with that economic news calendar. Let's jump in and take a look at the schedule here for tomorrow. Tomorrow, of course, is Wednesday's trading session, going into that hump day here in the markets tomorrow. Tomorrow, of course, is the 29th day of the month. Taking a bigger picture look of what's happening this week. Don't forget, this is the end of the month, the last couple days of the month. As you know, as we get into the end of the month, end of the day, end of the week, end of the month, end of the quarter, end of the year, we see increased volatility. Traders take bigger risks as they go into the end of the day, the week, the month, the quarter, the year, right? So as we go into the end of the week and as we go into the end of the month, we start to get more volatile markets, more emotional markets as traders get risk on, right, as they say on the trading floor. So we know that we do have some big extra volatile markets coming our way as we go in the next 72 hours in the trade room. I also want to remind you too, tomorrow we're watching that gold rollover for tomorrow. We talked about this last night. As I'm recording this right now, it does look like the 220 contract is still being traded on gold. We'll see what tomorrow brings. But again, be aware, gold is expected to roll over at some point tomorrow. I'll go into more detail tonight as we dive into the yellow metal. What else do we have going on here for tomorrow? We did hear some news today about a vaccine, right? About 10 o'clock this morning. You might have noticed the markets really got revved up at about 10:05, 10:10 this morning. As you know, been watching this coronavirus, right, over the last week and a half. And about 10 o'clock Eastern time this morning, the Chinese media reported they are working on a vaccine that should be ready within the next 90 days. That seemed to really boost the morale of these markets. Crude oil took a rise higher. Obviously, Nasdaq and S&P followed suit, and gold took a bath going lower. This is very much a known unknown for tomorrow. We don't really know how the markets will continue to respond to this. It seems like every day right now we're hearing a little bit more about this virus. It does look like as we get more information, the world is starting to back off that ledge. This might not be the end of the world that the news media wanted us to believe over the weekend, last weekend. But we will be watching closely tomorrow, right? We'll see if there's more people that keep talking about this. And obviously, this has been a big deal over the last 10 days. So we'll be watching that closely tomorrow in our trade room. What else do we have going on tomorrow? Like I said yesterday, we've also got OPEC floating the idea of a production cut. And we're going to hear from OPEC tomorrow, obviously. Well, not OPEC exactly, but we'll hear from the petroleum status report. We do oftentimes hear OPEC, right, chattering back and forth before those weekly inventory reports come out. I didn't hear anything more about that today. Oil took a nice big bounce here today. I'll tell you right now, OPEC could really fan that flame if they start talking tomorrow morning. And usually what will happen is you'll hear from OPEC between about 7 o'clock and 8 o'clock Eastern time. Usually it's right around 7:30, 7:45, right towards the end of the morning in London, right? So just keep it in mind. If we do hear something tomorrow, it'll be just before we get started, between that 7 o'clock and 8 o'clock hour. That is a known unknown as we go into tomorrow's trading session. So those are kind of the bigger picture things are watching right now. End of the month volatility, OPEC possible production cut. Obviously, that'd be a boon for oil tomorrow. And again, right, this vaccine for the coronavirus. So now we know the known unknowns, right? What do we actually know is happening tomorrow, right? We know, of course, we get international trade at 8:30. We know we've got some pending home sales number at 10 o'clock. We know we've got that petroleum status report at 10:30. And then, of course, little drum roll in the background, the FOMC announcement. I bet you didn't know I was a drummer as well over here. I'm a multi-talented YouTuber. The bottom line is that we know that we've got big news peppered throughout the day tomorrow, right? International trade at 8:30, pending home sales at 10. 10:30 is the petroleum status report, and that 2 o'clock FOMC meeting. Now, gosh, there's a lot to talk about here. I want to go over this quickly so don't waste too much of your time here tonight. International trade, I wouldn't expect that to be that big of a market mover for tomorrow. It sounds like a very big number, and it might be, but it usually doesn't move the markets as much as I would like it to. But that 10 o'clock, the pending home sales tomorrow, will likely be a really big catalyst for the E-minis, the Nasdaq, and especially the S&P. And then, of course, you got the petroleum status report. The one thing you do want to keep in mind for that weekly inventory report, if you're trading crude oil, you got to be careful after 10:15. I usually give most of my news events a 5-minute buffer before and after, but oil, it gets cranky before, it gets really wild afterwards. So I always bracket that news by 15 minutes. So 10:15 to 10:45. And then, of course, later on in the day, we got that FOMC announcement. Keep in mind, all of these news reports you can trade. You can trade the international one, right? You can trade the pending home sales. As long as you give it that 5-minute, that 15-minute buffer, you can trade that petroleum status report. And keep in mind, guys, when I say trade the news, what I'm not talking about trading the news report. I'm waiting for the news to come out. I'm giving the market 5, 6, in some instances with oil, 15 minutes to calm down a bit. And then I'm trading the momentum moves that we see that follow these news reports. So these 3 news reports tomorrow, I will definitely be keeping my eyes open, watching for opportunities to trade the momentum that we get after these news reports. Please don't misinterpret this for I'm actually trading the news, right? Trading the news is one of the easiest ways to blow out your account and really send you back to your 9-to-5 job. It's really a very dangerous environment to be trading during the news. And of course, tomorrow I'll be with you guys in the trade room to make sure we kind of walk you through the entire thing. However, the one news event I would not recommend you kind of quote unquote trade tomorrow is the FOMC meeting announcement. The smart money is going to sit in the sidelines tomorrow, right around that announcement. They'll come back on Thursday and they'll trade the market's reaction on Thursday. So what you want to remember is the FOMC announcements at 2 o'clock. It's just like the ECB announcement where a half an hour later they did a press conference. Just be very careful trading, after 1 o'clock, 1:30 tomorrow afternoon. If you want to trade the FOMC announcement, get to your desk early in Europe the following day and get after it then, right? That's a much more reliable time. What happens is because it's so late in Europe, right, when the FOMC announcement comes out, right, it's late there. So a lot of people will come back early the next day and they'll get after it the following day, right? I call that the reaction trade the following day. So again, Join me tomorrow morning, 8 o'clock. We'll do all this together. If you're on your own tomorrow, though, again, give it 5 minutes after the first two events, 15 minutes after that inventory report, right? If you want my opinion, right? Stay away from, right, that 1:30 until the close. If you want to trade the FOMC, come back early the following day. Get that European run that usually happens shortly thereafter. It's also worth mentioning on an FOMC day, the market usually has a relatively consistent personality. For example, if you're trading crude oil on FOMC day, I would stick to that 8 o'clock. Now, let me back up here. There will always be exceptions to every rule, but whenever I have the FOMC, remember, the FOMC means that everybody's got to make their money before 1 o'clock that day, really before 12 o'clock in all reality, right? Nobody really wants to trade, the smart money that is, they don't want to trade the afternoon session because the FOMC is such a big, powerful, unexpected news report. So, for example, we trade oil in our trade room. So on crude oil, you're going to want to get to it early because you got that inventory report tomorrow. So the key to oil is going to be get into that first setup between that 8 o'clock and 9 o'clock block. If you're on the S&P or on the Nasdaq, right, you're thinking 9:30 to 10:30 tomorrow, that block of time. Now, again, there might be some setups in between, but this is typically whenever you have that FOMC announcement. Everybody knows I'm not going to be able to come back after lunch and trade. I mean, you can, but you're playing with fire. So the best thing is you got to get your money out of the morning session. And usually because of that sense of urgency, oil between 8 o'clock and 9 o'clock, right? And of course the S&P between 9:30 and 10:30. Will there be opportunities outside of that? Absolutely there will. But what I always tell my clients is think about where the best opportunity is going to be and just trade those. Right? We don't want to do everything. We just want to do what makes us money, right? What pays the mortgage, what feeds the kids, what we can rely on, right? We can bank on, so to speak, overall. So think about those big blocks for tomorrow. Get to it early. We'll trade around the news events, right? And I know there's a lot going on tomorrow. Don't forget, you don't have to do this all on your own. I'll be right there with you tomorrow in the trade room at 8 o'clock Eastern time. Okay, so now that we know the basic lay of the land tomorrow, and I do apologize, that took a lot longer than I normally do. But again, there's a lot going on tomorrow, and I want to make sure you have a fighting chance to really get as much out of this as you can. Let's jump into some charts here right now. We got some oil. S&P, Nasdaq, gold. Again, we'll talk about all these here tonight. I'm going to jump first, though, here into the oil market. Oil, as you can see right now, is bullish. And again, you can kind of see what happened here. This is that 10 o'clock, 10 o'clock top of the hour here. Once 10 o'clock hit this morning, we had that vaccine announcement from China, and the whole market kind of shifted, right? You probably noticed this, right? Oil opened up in a range. And we spent our time this morning trying to fade those breakouts back into that range, right? Catching those gap traders like we talked about in last night's newsletter. But then all of a sudden, we went back into the range, and this thing took off to the upside. What it looks like has happened here is, it looks to me at first glance, we know we're bullish, and there's no doubt about that. The direction is pretty easy. But it does look like the market went up, kind of double topped here. And anytime I see a double top in a bull market, I always know there's probably going to be, a bit of a range here. So as you can see, I'm looking at that, right, as a bull market into a trading range. You can see, though, as we're going into the close, and this is what I mean when I say we'll have to see how these markets really kind of digest this news from regarding the vaccine in China. We'll see, is that fake news, right? Is that discounted by the markets? I think you're going to see a pretty active Asian session as we open up because of that. So again, we know we're bullish. I've got this as a range up here. And what does a range tell us to do? Ranges tell us to buy low. Ranges tell us to sell high. We know we have a bull market, so buying low, I can be a lot more aggressive, so to speak, than trying to be a seller off the high, right? So we know that is really going to be kind of what our strategy is going forward. We also know that gap, right, from over the weekend, that gap is a big milestone here. So we're definitely looking to fade the move back in off that gap. But I also, right, don't forget, we've come a long way down on crude oil. So if this keeps going, I do want to be open-minded to trading breakouts, right? Because breakouts could easily happen here as we go higher here. So let's think about all of those, right, different pieces of this puzzle. First of all, let's trade the range first. How do we trade the range? Well, we're above the range right now. So how can I sell back down into that trading range? Well, there's actually a great example of a pattern to sell right here. Watch back here. We go up with that big strong run. The buyers try to buy it once. They fail to retest the high, right? They pull back. They try it again, right? And then they dump it back down again. This is exactly the pattern that I'm looking for to sell, right, in the next couple hours here, right, or in the overnight session. We go up. The buyers have control right now, but we know the day ended. Well, again, I realize it didn't end in a range. It ended just above a range, but until I can see proof that range will break out, and we'll talk about this in a moment, I want to look to find a way to sell this thing back down into that range. The problem is I don't want to sell it too aggressively. The buyers will probably put up a fight here. So what I want to do is I want to go up. I want to let those buyers try once, let them try twice, and then once I've got two clear tries, right? Like I mentioned here, 1 and 2. Once I can see once and twice, now I know the buyers, right? They've got it all out of their system, right? The buyers have come in. They're trying to buy the first pullback. The aggressive buyers try once. The conservative buyers try twice. Once I get those two tries, now I know exactly where their pain points are. You know, isn't that what it is, right? Now we know where those buyers go, uncle, right? They start waving the white flag. We know where their stops are. And what I do is I look for a nice big signal candle here and just short right into those stop losses. Now, I call this a failure pattern, but it's a counter trend failure. And so the nickname I give to it is called a nested failure, because it's technically a failure and a failure, right? So nested failure, right? I call it a nested failure pattern. Now, if we do go back into the range, remember, stay out of the range. So how do we buy underneath the range now, right? What if we do end up back underneath the range now? It really all depends on how the market pulls back. Okay, this is where momentum plays a big part of this. So again, we know we have a range. We don't want to sell above the range, okay? But let's say, for example, that we go back into the range and we just kind of start hanging out there for a while. At this point, the momentum is very calm, right? Momentum is almost neutral, right? It's still bullish, but momentum isn't swinging back and forth, right? Momentum, if we sit inside that range, momentum gets absorbed, kind of like a dry sponge, right? So momentum gets absorbed. Now, I want to buy underneath this range. Look for levels of support, like that trend line right there, right? I love these expanding triangles. Expanding triangles, you know, right? I love expanding triangles when a range sets up. That is a great spot here to look for a long trade. I can also, of course, take the size of that range, use that range to create my buy zone down here from 30 down to 10. I'm also, as you can see, looking at a channel here, right, and drawing that channel down, right? That channel probably not going to be a very useful spot for me. So what I'll do is I'll go a little bit lower. I'll draw a trend line off of those levels, right? That will work, right? So you want to do is you want to kind of look for, okay, what levels of support can I find down here so I can buy underneath the low of that range. So we can definitely find a couple good spots down here, right, to be trading down inside that low. So one thing is, if I sit inside the range, I wait for the move lower, I wait for those sellers to try to sell that pullback, right? It'll look a lot like this one right there, right, where they come back, they try to sell off the moving average. Once I see those bears try to sell on that pullback, right, a couple examples I'm marking up here. Once I see these bears take the bait and try to short off that pullback, now I know exactly, again, where their pain point is, right? Where their stops get hit, and I can buy right into those stops for a rally going back up into that trading range. Now, I call this one a failure pattern. So it's a nested failure to sell off the high because you're going against a trend, right? It's a regular failure pattern. And again, you can see examples of this, right? We pull back, they try to sell it, we buy in the stops. They pull back, they try to sell it, you're buying into those stops. You're going with the trend, and you're simply looking for counter trend traders to foolishly try to pick a top, right? Simple as that. Now, also, you want to keep in mind, what if this market just tumbles though? Okay, so remember, the thing is, we're way above the high of that range right now. If it goes back into the range, it chills out a little bit. We lose a lot of momentum. But imagine now if we just collapse back down now. Do I sell this thing now? Not if I'm smart, because again, I'm now underneath the range, right? Ranges are balanced. We should end up back inside that range again. So if I tumble, if we really tumble, right, we don't take a pit stop inside the range, now that momentum becomes a concern. And remind me again, what was the name of that failure pattern that works best when momentum's a concern? A nested failure. One try, two try, and then back up from there. Does that make sense? Right? So now that you can see the difference there, hopefully it makes sense of why I use certain patterns for different situations. If momentum is a concern, let them try once, let them try twice, let them get it out of their system, right? And then buy right into those stop losses. It's also a good idea to look for a possible two-legged pullback on the way coming down as well. If it slices through the range, right, draw that trend line over, and we can use that trend line now. And again, right, I'm still looking for these same, support areas down here, right? I'm not just taking them anywhere. I'm looking for these patterns, right, to be a buyer off that trend line on a two-legged pullback. 1, 2, up and over and back up into that trading range. How am I doing so far, right? You enjoying the video so far? If you're learning a lot right now, hit that thumbs up button for me. I really appreciate you guys being here, tuning in right now. So now we know how, to buy low. I'm going to sell high here. Let's talk about breakouts, because a breakout is certainly possible here on this oil. Now, the most important thing right now, don't forget you get some resistance here overhead. So if we do run higher here, don't be surprised if this range here gets shifted higher, just like the oil did earlier, right? Oil began as a range down here, shifted higher into a new range. So don't be shocked if we jump up and go sideways up here, right? Up into the gap up there, right? A lot of news tomorrow could easily happen. What do we do if it goes sideways? If we go sideways, we buy underneath the range. How do we do that? Seller failure back up into that range, right? Okay, so now we know if we do get the range going higher there. What's a breakout look like though? Breakout, two simple breakout patterns. First one is a 1, 2, 3 breakout. Now this one, we're not trying to predict a breakout. Breakouts are difficult to predict. Look at how difficult it's been to predict those breakouts. Most breakouts are going to fail in real markets, right? Liquid, real, regulated, right? Markets, right? That way, in these markets, you're not going to get a lot of breakouts that'll be successful. In that situation, once I have that strong move up, that pullback, and that jump, now what I'll do is I'm going to mark up that high. I'm going to mark up that new trend line. I'm going to bring that trend line down and create that hidden channel. And this is where the magic happens. This is a great opportunity to get aggressive at buying that pullback. And I will. Once I get a 1, 2, 3 breakout, and again, it will usually be a little more dramatic than what I'm drawing right here, right? 1, 2, 3, strong move up, pull back to the moving average. Draw off of that high, bring it down to that low. You'll notice how I draw the channel, right? I'm not drawing the channel off that pullback. I'm drawing the channel off these major lows. That's the key to getting that, what I call a hidden channel, or some folks might call it a negative channel, reverse channel. That's a sweet spot right there. You can get aggressive and really hit that sucker right when it pulls back to low of that channel. Now that's the most conservative breakout pattern, because obviously you're waiting for the 1, 2, 3, right? What's more aggressive? This market might get aggressive, right? Because we saw that big move down last week and the beginning of this week. So what would a more aggressive breakout look like? Strong move up, keeps going through the gap. Very, very important here, right? Strong move up in the overnight. Profit taking here for the bulls. Higher high, pull back, trap low. Okay, now you'll notice there's a lot of details on this one. The first thing is it's got to be a higher high. Okay, that higher high is critical, because if you don't get a higher high, you now threaten to have that crown, right? That nested failure that I talked about earlier, right? Remember this pattern back here? We go up, the buyers try once, buyers try twice, sell back down. What don't they have there? They don't have higher highs. See, if you get that higher high, strong move up, pull back, higher high, now guess what? Now everybody piles on and they're waiting right below that low. Right? This is another one you'll want to get aggressive with, right? So strong move up, higher high in price, hit it, right? Nice strong green candle closing back above the moving average. Hit it, right? And this type of move can really run. Take a quick one-to-one target and let that sucker run from there. Now, I haven't talked yet about the bear side, right? Where do the bears want to go? The bears want to go all the way back down that 52.13, don't they, right? So bears, but they got to get control of this market. How do the bears get this market back? First thing is they've got to get a strong move down. Now, a strong move down is not enough to break this thing out. Again, if a strong move that's all it took, we wouldn't be talking about this right now, right? It's not that easy. Once we see a strong move down, I'm still looking for that 1, that 2, and that buy back up, assuming they blow through the range here. But what if they hold it? If they hold that pullback and jump off that moving average, now we have a reversal, now we have a breakout, and now we have a great opportunity. Mark up that low, draw that new trend line up, 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 up at the top, right? Don't try to draw it off the medium swing, off the big swing, and now you've got that sweet spot. This sweet spot, when you get that, get aggressive. Get aggressive, right? You might not even get the perfect entry pattern, but that momentum and the fear of missing out will be everywhere in the market, and the goal will be to get down to that 52.13 as we start to short this thing back down to retest those lows. Again, tomorrow, as I mentioned earlier, that 8 o'clock to 9 o'clock block will definitely be where I would expect to get the best setups tomorrow morning in the trade room. And speaking of the trade room, don't forget, we get together every morning, 8 o'clock Eastern time, and we trade this strategy together. And speaking of strategy, if you're not going to be with me tomorrow in the trade room, the next best thing is to grab a copy of our free trading course. Our free trading course will talk all about my 3-step strategy, my favorite entry setups, how we draw trend lines and channels, and you're going to learn so much as part of that free course. I really want you to take the free course, though, just so you can get the most out of our time together every evening on this newsletter, right? So if you're tuning in every evening, grab that free course linked up in the upper right-hand corner. I'm also going to put all of the links I talk about tonight in the description of the YouTube video. So definitely dig in, grab that free course, right? You're going to love that free course. It comes with lots of examples of how we use this strategy on our favorite markets. Okay, now we know the plan, though, on the oil. Let's keep this party rolling here. How about some S&P? What do we know about right now on the S&P? S&P bulls, they're trying to close that gap. That gap up there at 32.91. Nasdaq got it. I would imagine once we open up in Asia in about 20 minutes, where we'll probably see that thing snap higher here. We'll see what happens. But the one thing we can easily see here, right, is there's been no real deep pullbacks, right? Whenever I see a market that moves this far, and again, what happened was, right, the market took off, guess what, at 10 o'clock Eastern time. It was like the tale of two markets today, if you recall. It was that kind of clumsy, grindy, rangy market earlier on. And then, of course, we had that 10 o'clock hour that came, right? The vaccine announcement comes out and the market blasts, right, as it goes. Now, that blast, right, one of the most common scenarios we get after a news event hits the tape is a spike in channel. We break up, we go into a very narrow channel. Now, this is a really big clue, because what does a spike in channel tell me? If you watch my newsletter, you know spike in channels are really one of my top 5 patterns that I think every trader should learn. Anytime we see a spike into a narrow channel, what you want to do is you want to look back at the base of that channel, right? So right where that channel runs into the spike. See what I'm doing here, right? That's what I call, that's the buy zone, right? This is the pullback zone. And the reason why I want you to know this is because a lot of times the market will pull back really deep and it feels like we're reversing, right? You're going, man, this is really strong. What's happening, though, is because it's such an aggressive move higher, a lot of buyers are still waiting for a deep pullback, right? And so what happens is they get that pullback back down again to the base of that channel and look to buy that deep pullback. That's a really big clue on this chart going forward. So the moral of the story on this one is expect that deep pullback and don't think it's a reversal. It's probably not going to be a reversal unless you see the 1, 2, 3 reversal, as we talked about on the oil. And we'll talk about that here as we go. The one thing else, though, that really stands out here right now is there hasn't been any real deep pullback ever since. Right? When a market just keeps on going and going and going and going and it never really pulls back, Usually you can expect either a range, right? Because nobody's getting out, but nobody wants to buy any more after a big run, or B, a very sharp pullback, because the buyers simply run out of bullets, right? Nobody wants to buy this high, right? So what happens is when a market, again, when it's kind of running and running and running, usually what happens is we'll see a nice deep pullback. We'll see those sellers in the market get fooled, and we get this beautiful risk small, earn large opportunity, right? This is our bread and butter, right? Buying those deep pullbacks, anticipating those counter trend traders getting kicked out of their trades and then running back up to retest the high. So we don't have that yet. That also is something we're thinking here for tomorrow. And obviously you can see that goes right into the same idea, right? That plays right into that deep pullback plan for that spike in channel. So things are really jiving right now on this chart. The one thing I'm not quite sure about yet on this E-mini is where the range is. The range is a little bit fuzzy here right now. At this point, I can easily see it's a spike in channel. This range, as you can see, it looks good right now. We'll see how the next couple hours go. I may, again, we may see this thing open up in Asia. Right now as I'm recording this, it's like 5:40, right? It's about 20 minutes here till Asia. So we may see, by the time you're watching this, it may be up here, right, and chopping around up here. So expect a range at here some point. I wish I could I'm pretty good anticipating, but I can't read the mind of the market that well. I don't know exactly where that range will be. But let's say, for example, though, the range does sit right here, right? If this is our range, we know exactly the plan, right? We talked about this for oil. If I want to sell it, I want to use that nested failure. Let them try twice. If I want to be a buyer down here, I use that seller failure, right? And I buy into those stops, right? If it runs up and then tanks down, that momentum now is what? It's too strong to buy. I'm going to buy it, but I have to wait for those bears to try once, try twice, and then run back up. Remember this from oil? The same thing we talked about on oil is also we're watching for here on the S&P, right? So as we go higher here, right, I would definitely try to avoid selling before we get that gap fill, right? You know what I mean? If we jump up here, I would want to make sure we get the gap fill, or at least come very, very close to that gap fill, go up, buyers try once, buyers try twice, and then sell it, right? Slap that sell button and sell right into those stop losses as we go back down to those lows. Measure the amount of the move above, measure the amount of the move down below. We call that the pendulum swing, amount up, amount down, and that will give you now that final target for your short. Again, if we go up and then collapse back down though, momentum is way too strong. One try, two try, buying back up from there. Okay, and again, we're looking at this area down here as a really ripe area to be buying. If we sit inside the range, right, calm down a little bit inside the range, then we make the run lower. Now it's a straight failure pattern, right? Straight failure pattern back up into that trading range. All right, guys? And again, I'm simply illustrating these points right now. You can see a lot more examples of these on our favorite futures markets by grabbing that free course in the description of the video, or hit that big information icon in the upper right-hand corner. So we know we're looking for a range or a really deep pullback. We know the patterns we're going to use to buy that pullback. Now, what else do we look for here? Possible breakouts, right? A breakout to the downside would be a 1, strong move down, 2, pull back to the moving average, and 3, a jump off the moving average. Again, when you see that jump off the moving average, the FOMO starts kicking in. Mark up that low, mark up that high, and when you get that pullback to the high of that hidden channel, your job, as I mentioned last night on the newsletter, you have a very simple job. When you get a good setup going the right direction that allows you to risk small and earn large, your job is to hit that trade, take that trade. You don't want to miss that trade. Now again, I'm not going to try to anticipate the reversal, right? I'm not going to get roped into trying to sell when a market slips below a moving average, right? Every time we go below the moving average right now, what happens? The buyers are buying the darn dip, right? So the last thing I want to do is be that sucker who's caught holding the bag, right? As we pull back, start trying to get too aggressive, right, what happens is you become the gunpowder, right, for that move going back up to retest those highs. Okay, now again, we may see this come out and it may jump higher here into a range. If that's the case, right, adjust the range higher, wait for the pullback, wait for the seller failure, and buy it back up. Or, right, or we know if they can get through that gap, right? Again, one option would be a 1, 2, 3 breakout. This would probably be the best one to look for because that 3,300 is definitely going to be a big objective there, right, for those bulls, right? Mark up that high, mark up that low. We're buying the low of that hidden channel. Or if we get that strong move up, profit taking pullback, higher high, trap low. I love this pattern, but you really got to make sure you wait patiently for it. Get that higher high, right? Get that higher high and then hit it, right? Once it traps low. Target, of course, big round number at 3,300, and we'll leave the runner from there, right? And that's the thing. Tomorrow is definitely a day where you're going to want to try to leave a runner if at all possible because, again, I mean, look at how big that move down was. If we can get in long, if we can get something going here as it's going higher here, take a quick first target and let that thing run. You never know how far to go into lunch. But again, make sure you remember though, FOMC. Get to it early for tomorrow's trading session. And again, as I mentioned earlier, I would assume if I had to guess tomorrow, if you could only be at your desk for 1 hour tomorrow, I would say 9:30 to 10:30 in the U.S. session. Now, obviously, if you're in Europe, you'll have the pick of the litter tomorrow before the opening bell in the U.S. That's one of the nice parts of being in London or being other parts of the world on FOMC day. But if you're with me tomorrow in the trade room, that 9:30 to 10 o'clock, 9:30 to 10:30 block we talked about earlier, that will definitely be where you want to be at your desk, right, for that hour tomorrow. Because, you know, again, market opens up at 9:30. We don't want to trade too late. That's your sweet spot there for tomorrow. All right, we're looking good here now. So S&P is looking pretty good there. How am I doing so far? Any questions? Any questions? Drop those questions in the comment section below. And I haven't seen you subscribe yet. Make sure you subscribe. I don't want to miss the next one of these videos. All right, let's keep going here. How about some Nasdaq? Nasdaq is very similar to the S&P, like it usually is, right? It's not exactly the same, but we know we're bullish here on the Nasdaq. We can easily see, and if you look closely, they didn't actually get that gap fill. I don't believe they actually have it yet. That closing price, if I go back here, get the mini daily box here, there, closing price there at 90, yeah, 93. What do we got here? Come on, closing price 36.75, right? I don't think they got it. I don't think they got it, right? They didn't get it, right? They're at what do we got here? 36.25. So they haven't got the gap filled yet. It does look like they're going to get the gap filled. I mean, let's be honest here, right? They're right up around that gap high. But you'll notice here on the Nasdaq, right? We're obviously bullish. They're really close to getting the gap, right? The gap filled. Is there something here that stands out? Do you see something here that might stand out to you? Again, 10 o'clock Eastern. Right, 10 o'clock Eastern time, right? The vaccine announcement comes out. The market blasts higher. It goes into a little tight little trading range, little channel. What do? It's a spiking channel, right? Find the base of that channel, right? Buy that pullback, okay? Don't confuse it. Don't confuse it for a reversal. All right, it's very easy to confuse that with a reversal, right? That's one thing that we notice immediately here on this NASDAQ. The other thing we see is, well, I guess what we don't see is a lack of any deep pullbacks, right? Usually what happens is the market runs up, it pulls back, it kind of fools a lot of those counter trend traders, right? And we're buying into stops. Again, a small risk, big reward opportunity. Those are the trades we live for as traders, right? Those are trades we live for, right? We look for a big move up, a deep pullback, bears get fooled, right? And they get stopped out for an easy short covering rally back up to the high. We didn't get that here today. So again, when this happens, whenever I see a day like this, and these do happen relatively frequently these days, right? Anytime I see a market that keeps running like this, it's obviously very emotional, right? And when markets get emotional, they do things they don't normally do. Usually, right, a big move up will turn into a range, right? I couldn't quite get my fingers on the range here tonight. You know, like I said earlier, we're kind of waiting to see how the market looks here in Asia, but a range is certainly possible, or a very sharp pullback, right? Remember, buyers are not going to want to buy this high anymore. Big psychological level up there, that gap fill, right? So buyers kind of, and not to mention, look at that green candle, right? That green candle is the definition of an exhaustion candle. They went up. They couldn't actually get the 36 3/4. They closed right below the top of that channel. That really makes me think we're going to get that deep, deep pullback. Now, again, we're going to open up here about 10 minutes here now in Asia, and we'll see what happens. I'd be surprised if we don't see a little gap up, right? Get that gap filled and then come back down here. Now, we know we're looking for one of two things, a range or a deep, deep pullback, right? A range or a deep pullback. If I do get that deep pullback, now there's a couple things you want to think about here. If we just pull back to the low of this channel, I don't think you're going to need to use that nested failure. So if we pull back to low of the channel, moving average comes over, right? Again, look at this example back here, right? That kind of pattern, right? We pull back, the bears come in, they try to short off that pullback, thinking for some reason the market has reversed, right? We buy into their stops, and I always try to remind you guys, look for that pullback follow-up, right? This is a very common combination pattern, right? A failure into pullback combination. In fact, we see a lot of these patterns in that free course that I mentioned earlier, right? Linked up in the upper right-hand corner, right? Or in the description of this video. So again, if we do get the pullback here, look for those bears to try and fail, look for the bulls to come back, right? And get that pullback. What if we get a much deeper pullback? Right? If it really pulls back deep here, right? Really pulls back deep, what you want to do is, again, don't freak out. It's not a reversal yet, but let those bears try once, let them try twice, and then I can get that run back up to retest the high. How do you know the difference? It's all about momentum. And I'll be honest, momentum is a little bit difficult to tell when it's happening, so I would definitely recommend come out and do it with me tomorrow in our trade room, right? I'll put all the links to get registered in the description here on YouTube. I also want to remind you too, when you get these really deep, deep pullbacks, when those sellers fail, the ideal is this, right? When I get that failure, the ideal is to go up and pull back and get it again, right? This is that combination, failure into pullback combination, right? Take a quick first target, add to your position way back. But oftentimes with those deep pullbacks, we oftentimes don't get those really deep, deep pullbacks. We don't get that pullback right away. What happens is it runs higher, right? You don't want to chase after it because you know where they're trying to go. You don't want to buy high. So if we get a beautiful failure pattern, a nested failure, when those bears get stopped out, this thing oftentimes races. Okay? Now what I want to do now is keep your eyes open for that two-try trap. Okay? We talked about this earlier. This is usually what I use for a breakout pattern. But same thing before, right? Remember that higher high, trap low? Those are two setups to watch for on the deep, deep pullbacks. Make sense? Okay? So failure patterns, nested failure patterns, pullback patterns, and of course the two-try trap pattern. Now we're on to something here, right? Now we got a pretty good plan moving here. Again, got to keep an eye on the range. Right? If we go sideways up here, watch the range, get underneath the range, get those bears to get caught looking and buy into those stops. Now, how do we trade breakouts here? The breakouts here are going to be a little bit easier because you've already kind of got that gap. You know, technically we're not there yet, but we're basically right there. You know, very different than other markets like oil and the S&P where we've got to get through the gap. If we can get really any bullishness going higher here, whether it be a 1, 2, 3 breakout, mark the high, mark the low, and buy the pullback, or right, the strong move up, profit taking, higher high, trap low. These are all really, really easy patterns now. Just got to wait for them. That's all. Right? I definitely want to clear above the measured move. Right, I definitely want to make sure we've cleared completely above that 91.48 3/4 area there for that measured move. The same thing is true to the downside, right? 1, 2, 3 breakdown. You know, again, don't be too aggressive, right? Trying to sell that first pullback because it might fail, right? The odds are pretty good it fails. I'm going to mark up that low though. Once they jump off that moving average, mark that low, mark that high, and again, when you get that pullback to the high of that hidden channel, your job is to smack it, right? Get in, get aggressive, and get short. Your target, of course, get a big round number. I'll bet that big round number though is not what they're going to stop at tomorrow though. If they do get this thing right back down, it's this range from yesterday, right? So if those bears, if they can get this thing again, they're probably not going to stop at 9,000. Just put that final target right in the middle of that range and just, right, go to lunch if you want to. Let it just collapse back down right into that range. Buyers have so much open space above us, right? Buyers have so much open space above us. Hopefully we'll get a chance to get some breakouts running higher tomorrow. And, you know, as you can see, I don't care what happens. I really don't. But the key is you got to have a bunch of these kind of if-then statements, right? If it does this, then do that. If it does this, do that, right? If it does that, do this. You got to have these all ready. Because remember, tomorrow morning when the you-know-what hits the fan and the market start going crazy, you better have a plan to lean on. Because if you haven't noticed yet, you can't trust your instincts, right? Your instincts are going to rob you blind. They're not going to help you, right? Your instincts cannot be trusted. You have to have a plan. If this happens, I'm ready. And don't forget, tomorrow morning, 8 o'clock Eastern time, we'll do this together, right? I think that's the most important thing, right? You know, doing this on your own is really difficult because there's a lot to keep track of. You know, we use a checklist in our trade room. If you can if you can follow a recipe to bake a birthday cake, right? If you can do a puzzle, right, and kind of check off each item, I provide a good checklist to all my clients. They can kind of check off all the items. They do it with me, right, every day, to make sure you're doing everything the right way. Now, let's wrap it tonight on the gold. I do appreciate you guys sitting tight with me here tonight. I do apologize for the long video tonight, but I want to make sure you've got all of those potential scenarios ready for tomorrow. First of all, again, we are watching gold rollover right now. Inside of NinjaTrader, you'll notice here, I've got the 220 contract, still has quite a bit more volume, right? Double, a little bit less than double the volume there. Now, keep in mind, tomorrow morning, you know, as of 6:30, 7 o'clock Eastern time, don't be surprised if that 420 has more volume. In fact, you might see even earlier than that. There's really no wrong way to do this, you know, but once you have the 420 contract with more volume, you want to change that contract month to 420 and trade that one instead. All right? We'll obviously be here tomorrow for you guys if you have any questions about gold rollover, right? So we know this rollover for tomorrow. What else do we know right now? We know we're bearish. That's pretty obvious, right? 10 o'clock Eastern time this morning is when everything really turned, right, and ran lower. So we know we're bearish here. Bear markets telling me to sell at resistance. And then you notice here, right, we get this big move down. What do you see right there? Double bottoms, right? Double tops. You know, I talked about this earlier, right? When I see a bull market that double tops, I immediately think range. And now my focus is to buy below the range. Right? Whenever I see a double top in a bull market, I think range. I find the lowest point between the two, and I look to buy right below it. The same thing goes to a downside, right? Big move down, double bottom, right? And by the way, when I say double bottom, I'm not talking about exact double bottom here. You don't need to be perfect. Just once we get close to it, right? If it bounces, there's your double bottom right there now. Find that high, and of course, sell above that high, right? So this is a really good example of that here on the gold. Strong move down. They double bottom. You know, again, I'm not looking for perfect double bottom, just something close, right? And then, of course, I mark that one up right there, and now I want to get up and sell up above the high of that trading range. I also, as you know, whenever I see a trading range, I love me some expanding triangles, right? Look at how these, right, trend lines coming up here. I'll tell you right now, I don't know why it took me so long to learn expanding triangles, but the last couple of years, though, I've really started to see more of them, and I've really been able to use them in combination with, that's the real, kind of the real gold, so to speak, if I can, you know, put a little pun together for you, right? That's the gold right there, because if you can combine that expanding triangle with another level coming down, man, oh man, that really kind of boosts your confidence. It keeps the counter trend traders away. It really makes our job pretty easy. So I really like this trend line overhead. I really hope we can get short off that trend line and then use the other trend line for your target, right? So you're in off the high, final target back to the low. Okay, just remember though, as that triangle gets wider, it will eventually break through the bottom. All right, just keep that in mind, right? As it gets wider, that triangle bottom won't hold because momentum gets stronger. We've talked about that quite a bit on previous videos. Let's keep this going though. So we know we have a double bottom, right? That goes into a range. Now, what I really think the good stuff here is, and this is gold where, again, we've had gold really very bullish over the past few weeks, and so there is potential here. This market really collapses, again, just like the S&P and the Nasdaq have a lot of room to go up, right? The gold is quite a bit of open space to go down, as you can see, right? So the bottom could easily fall out of this, but I hope it doesn't. Hopefully we can incorporate. Now, anytime I see a strong trend like this, I try to connect the lows like this one, right? And then pop it up around the high. And I've got a couple different levels here. One is right there. I really like the one tighter though. Right there. That one right there just seems to be something they keep on showing some love with. So I really like that area overhead. That is a channel high. We're bearish. We're, technically we're range bound. We'll see if it holds overnight here. If we can get above the top of that channel, that will be beautiful, right? To sell high. Nice risk small, earn large opportunity. I'm also doing the same thing here on these lows, right? So I mark up those lows. I bring those up top there. Same thing, right? And this is a really great channel because you notice what happens? It all lines up in the same spot, right? We take our trading range. The trading range tells me the size of the range. That creates my sell zone, right? The range is there. I take my trend line. That's a level there. I take my channel. That's a level right there. So hopefully you can see by now, right? Bob Ross will be so proud of my coloring skills right now, right? It's a very happy area, right? To be a seller up in that area. So bottom line is I'll keep my jokes to myself here. If you don't know who Bob Ross is, make sure you go to YouTube, right? And just search for Bob Ross's greatest hits, and you'll have a brand new best friend, right? He's great. Anyways, the bottom line is I want to be a seller, right? What's the best way to sell on gold? I want to get up in that sell zone, right? If it's a regular pullback, I look for a breakout pullback failure, sell back down. If it's a really steep pullback, right? Steep pullback, sharp pullback. Look for that nested failure. Why? Because momentum, and sell it back down. Don't forget about the two-legged pullback here. Sometimes those deep pullbacks will give us. Mark up that trend line. Get up and over and in, right? Use that trend line for that two-legged pullback, that 2LP, right? That two-legged pullback setup. Stay out of the middle. Stay out of the middle. Now, could I buy this market right now? You can, but you really got to be careful. What's the best way to buy a bear market? Crown reversal, right? So as we're going lower, we don't, again, I can get aggressive trading into failures above the range. I can't be aggressive buying a failure below the range. What do we do? We let them try once, we let them try twice, and up from there. Absolutely. Why? Because momentum. Right? Momentum is too much, right? It's too much. The bears are going to try. When they make a strong run down, they're not going to try just once. They're going to try once. They're going to try twice, right? Now, new lower low, pull back to the moving average, one try, two try. I would definitely here on gold, because of the fundamentals of gold right now, right? I would definitely look for that trap low incorporated with that nested failure. I call that a crown reversal. And again, you'll see hundreds of examples of these patterns as part of that free trading course. What does a reversal look like here? Right? A reversal would be, or let's do breakout first, right? How do we break down? It's easy, right? We already know the patterns. There are two patterns. One is a 1, 2, 3 breakout, right? I got to get proof here because you're sitting right on top of that measured move. Once we get the 1, 2, 3, mark the low, up, right? Up around the highs, find that hidden channel. And once it pulls back, what do? You smack it. You got to get aggressive on those because they're going to happen fast. Well, let's put it this way. The breakout won't happen fast. The breakout is a pain in the butt because you have to wait for it, right? That breakout might take 20 minutes or so to get set up. But that setup will come quick, and you got to hit it because everyone's waiting for it, right? Don't be sitting on hands around that breakout, right? Hit it, and again, where's my target? My target is back down to that low, 1555, right? We talked about that last night, right? 1555. There's a big range down there between 1550 and 57 or something like that, right? So 1555 is a good target as we go lower. Now, again, I can go strong move down, right? Profit taking, lower low, trap high. That's a great pattern. 2-try breakout pattern. What else can we do here? As we go higher, 1, 2, 3. Yep, hold the pullback. That's the key. If I can get a jump off the moving average there, now mark up the high, find that hidden channel and hit it, right? Where's my target now if we go back up to retest the high? The target, of course, is back up, if we reverse, you got to be thinking we're going right back into that range again, right? So if we get that 1, 2, 3 reversal, new channel, find that channel, buy the low of that channel. I would definitely make sure you're taking a lot of your profit off up in that 1582 area. You got just too many tops up here to really be confident we're going to go all the way back up to 1588. And again, we got FOMC tomorrow, so FOMC is notorious for moving gold around, so I probably should warn you about that as well, right? Gold, out of all of these markets, is probably going to be the most difficult tomorrow before and after the FOMC announcement comes out. I don't think anybody is expecting them to fool around with rates at all, so I don't expect there to be that big of a drama around it, but if there's one market for tomorrow, if you said, Joe, I can only trade a couple of these markets tomorrow, which one shouldn't I trade? I would say the gold is definitely going to be one of those markets be difficult on an FOMC announcement because it has a lot to do with monetary policy, and of course gold is really a fundamental correlation to the US dollar. So we definitely know that FOMC announcement will be a very challenging part, right, for gold tomorrow. But not to worry though, I'll be right there with you tomorrow, every step of the process in our trade room. I want to see you there, right there with me. So get registered, right? Don't let another day slip through your fingers. Go right to the website here at schooloftrade.com. If you're on the YouTube channel right now, all the links to get registered as a member, the links to register for our free trading course, they're all linked up in the description of the YouTube video. Don't be afraid to call that toll-free phone number. Don't let my ugly mug scare you away, right? Call me anytime in the office. Use live support if that's easier for you, right? And don't be a stranger. I know that trading is fun and exciting, but I know it's difficult to do it on your own. And even though you're alone at your desk, listen to my voice right now, watching this video, you're never alone on this journey. So please keep in touch. Let me know I can help. Hit that thumbs up button. Subscribe to our YouTube channel. Type those questions and comments in, right? And how did I do? Give me some feedback in there. I'm always trying to make this video better for you, right? I know I try to go fast. I try to get it short as I can, right? But I got a lot of good stuff I want to share with you, and I know you appreciate it as well. I appreciate you. Hope you guys had a great day out there. We'll see you guys tomorrow morning, bright and early. If not, come back and see me same time, same place tomorrow night, and we'll do it all again. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.